Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazaar Morning Call. We're coming to you as always from the CNBC TV 18 Motilal Oswal studios. What you are seeing are the election headquarters, and we're completely charged up here at CNBC TV 18 and throughout Network 18, getting you, of course, the biggest, the most comprehensive and the most incisive coverage throughout. We'll talk about this. Bihar obviously is, center stage. It's center mind. But there's a market to trade, and those global cues are looking a little wobbly this morning. Nigel, hi, morning.
Well, morning, and not a bad day actually to have a domestic cue, and hopefully it works out in favor of what the markets are expecting.
Yeah.
But otherwise, overnight, the global markets clearly got spooked. We've been talking about this. Is it in a bubble or not?
Yeah.
Yesterday were the first signs of, a sharp downtake. And actually, I think the Nasdaq in the last 6 trading sessions is down 5 out of the 6. So there is some kind of selling that's creeping in there. But to be fair, they've had a very, very big run.
No, absolutely. And so let's just quickly outline what cues we've got overnight. And as far as the global picture is concerned, those cues are not looking very, very promising. A sell-off, and a sell-off led entirely by technology, but it wasn't just limited to the technology space. And that's what changed overnight. The Dow, the S&P 500, the Russell 2000, none of the indices could be spared, so to speak. And it was tech names that were leading from the front. You had names like Nvidia, Broadcom, all of them are falling between 3 to 4%. There's some murmur again about whether there will be an interest rate cut or not by the Federal Reserve in December. Also some chatter about how the Fed may still, or how the government may still take more time in releasing a lot of the crucial economic data, including the jobs report. Remember, we've not seen a jobs report for the last 2 months now. And one of the Fed governors made that point, or made a statement about how they don't see the need for an immediate December cut. So that spooked the market. Now, with valuations being where they are on the AI trade, you just need the smallest of triggers to get people running to the side. And that's exactly what transpired yesterday. This morning in Asia, we actually have an additional issue in the form of data that's come out of China. If you're talking about the industrial production number, or you're talking about the fixed asset formation numbers, most of those parameters for October are quite weak. In fact, fixed asset investment, which includes real estate, that's actually contracted 1.7%. Versus a decline of 0.5%. So it's not looking too great across, some of the regional markets as well. The implied open is on your screen. It's indicating the start is going to be probably about 95 points lower. The reason our screen right now, the GIFT Nifty and the implied open, is not reflecting a wider sell down is because of the local queue. The bets are that the NDA will manage to go ahead and emerge victorious in Bihar. That is what the bulk of the polls have been indicating. Now, the question is whether this is a done deal, because one of the polls, and that's the Axis poll, that was indicating that the margin is actually fairly narrow. So that's what we are going to be keeping a very close eye on. The counting is all set to begin, and I think some of the early trends will start emerging 9 o'clock onwards. But yes, there is a sell-off across Asia. Markets are down between 0.5% to about 1.5%. So there's a fair amount of caution. And remember, our market has run up. The Nifty has had a great streak so far this week. We're up about 2%. We've put on about 600 to 700 points from the lowest point of the current rally. So we'll see how this transpires. But Nigel, very interesting day lined up, given the global cues on one side and the big domestic cue on the other.
Well, that's right. The markets are working with the NDA coming on top, and then the focus shifts to the negotiations with President Trump, and then all the attention will move out there. So the bulls will be hoping that actually the outcome that they are factoring in, that actually works out. But in yesterday's trading session, we came off the top, and you'll be wondering what's happened. Were the FIs big sellers? No, that wasn't the case. Actually, the selling was only around 400 crores in yesterday's trading session. What played out in the final hour of trade yesterday was obviously the sensex has their weekly expiry that played out. And besides that, there was big unwinding of positions. Whether you look at the Nifty, You look at the Nifty Bank, there was a lot of unwinding of positions that we saw. Even if you look at what the FIs did in yesterday's trading session, there was unwinding of positions both on the index futures as well as on stock futures. So net in yesterday's trade, there was a lot of lightening of positions getting into a big event like the Bihar elections. And also overnight, the cues are fairly, somber. So we did see a fair bit of unwinding. One cue was that, in yesterday's trading session, the futures did see a sharper pullback. The Nifty ended more or less flattish, but the futures actually were under some pressure because the premium did come down yesterday. There was some contraction that we saw in the premium from around the 110, 120 that came down to around 70 odd. So there was some unwinding, some mild shots as well getting into the system out there. But pulling up what the FIs did, unwinding of positions, index futures as well as stock futures. In percentage terms, the shorts are now at around 88%. So it's pretty much at the upper end of the range in percentage terms. In absolute terms, it's ballpark 1.6 lakh contracts or thereabouts. Moving to the options data, then, we had a couple of strikes that were fairly active in yesterday's trading session. And the 26,000 calls saw a good amount of open risk build up. And just when the bulls thought that they had that covered, well, we did slip from the top. So this becomes a crucial mark. Premium at around 100 rupees, 26,000 call, fair bit of open risk built up out there. The 25,500 put though, and the recent low, that gives the bulls hopes that, till that 25,300, 25,500 level does hold out, then they could believe that they could fight back, in the coming few trading sessions. So important support, 25,500. Very, very important. First reference point at around the 20 DMA, which is at around the 25,748, which we could visit in the first hour of trade itself. But there is a stiff resistance coming in at around that 26,100 odd mark. For the last few trading sessions, the Nifty Bank has been going to those fresh all-time highs and it's been selling. So this is the crucial, juncture that you're looking at in terms of a resistance level that we're looking at on the Nifty Bank. A stock that I'll be tracking is Glenmark. The stock is 18% off the recent peak that we saw in the middle of 2025. And from there, the stock has seen a decent correction. Now it's holding above the 20 DMA. It's in the middle of the 20 and the 50 DMA. Price action suggests that maybe, in fact, there is some kind of buying at lower levels. There was a fair bit of delivery-based buying, some open risk build up as well. So I'll keep an eye out on Glenmark, not just for today, but for coming few trading sessions as well, Surabhi.
Okay.
Bihar is the big story, right?
Yeah.
And I think, I think leads are already starting to come in. So counting across, I think, 46 odd polling stations has started. And that's the big one. And the counting began at 8 o'clock in the morning. Initial trends, and I think, by the way, we'll have initial trends by, I think, 8:45, 9.
9, I think, yeah.
Right? And I think we'll have, within the first 2 hours or so, you'll start to get some sort of a picture in that sense. Remember, overall outcome is usually expected by early to mid-afternoon. I think about 11, 11:30, 12:30, I think we'll get a real picture of the outcome. Of course, I think we've been discussing about US equities, etc. It's not a green-looking screen. It's quite a red-looking screen, actually. So it's technology, which has been the pain point. Nasdaq, 2.25% lower. And it's largely a valuation concerns and, this entire AI thing, as I think Surabhi and Nigel have been talking about. NVIDIA was down 4%. Reports earnings next week. Tesla was down 7%. Disney was down 8%. Macro markets 10-year yield went up 5 basis points. The dollar index was down a little bit, not very much. And basically, since we closed absolutely unchanged yesterday by the end of it, I think levels don't change very much. 26,100 eventually, 20 days moved up. So support now 25,748. 40 days has been actually unchanged after yesterday, 25,444. As I said, the levels are the same. Nifty Bank support 20-day, which is 57,918. That's very close. So maybe one more support level is the swing low in the month of November, which was 57,158 or so. So those are just some sort of, broad levels and numbers out there.